Well, hello everybody. Let's get going here. Midweek update time. It's the 20th of August. So we're getting close to the last month. Well, it's the true summer month. We'll see what happens as we get into September. We're going to share ideas, so make sure you take responsibility for the outcome of whatever you decide to follow along with.
All trades and analysis in this video are for professional traders only. This video has been released to the public after a delay required by our compliance department. Maverick Traders received this market recap immediately, along with real-time trading support and resources. Maverick Trading is a proprietary trading firm that backs professional stock and options traders with firm capital. Our traders keep 70 to 80% of the profits they generate. If you're ready to become a professional trader, click the apply link in the video description below. Let's break down what happened in the markets today.
So let's get started in the current outlook. And it's more of a corrective action, more of some profit taking, more so than another sell-off. We'll get to the chart here in a second. Rob had mentioned this on yesterday's update, and we talked about it even a week before. Usually when the summer winds down, so does some of the trade activity. And so it's kind of common to see profit taking. And now a couple of weeks ago, that gap down seemed like it was something substantially more, a little bit more worry or fear. I still believe that it was just an excuse just to crash the register, hit the register. So we're going to keep an eye on it. But for now, you guys can see that we're still just a little cautious on the week, just because we have a little bit of that corrective action so far. But it's not like it's falling apart. We're still a +3 when it comes to the overall motion of the ocean. So we just got to focus a whole lot on those support and resistance levels. We do have jobless claims coming out. We'll see if that changes things. The manufacturing and services PMIs. We also have the leading indicators, which is something that the Fed likes to look at. I've been following along with the interest rate talks back and forth. Did we price in 2 cuts or 1 cut? Can we justify more than 1 cut? And I think it's a little bit more noise when it comes to the effect on sentiment right now than it is something that's to be really looked at and kind of feared and maybe anticipated. So we just got to continue to do, easy to say, trade the markets in front of us. So going out, you could see there's lots of push and pull this morning. Looks like a big slide to the down. Break down the NASDAQ, gaps down, trade slower, but it's got its first bounce going on. The S&P's pretty much flat, but the Dow's actually hanging in there. Taking a look at the heat map, Tesla's one of the bigger movers. Palantir, right? We've got Amazon down again, Apple. I'm just going through the Mag 7. I'm going to some of these, and it's kind of par for the course. So not a lot of stuff, not a generalized complete red day, but very specific when it comes to some stocks that have had some or might have experienced a pretty enjoyable summer. So we'll have to take a look at that. Another way to look at it, we don't know that. Let's take a look at our groups and let's see if anything's changed. I'm going to go a little bit further out. I'm going to take a look at the 3-month versus the 1 month, and then we'll go to the week. But you can see, so 3 months, everything's pretty honky-dory, but look what was leading. 3 months, communications, technology, basic materials. Well, basic materials is kind of a surprise, but I imagine it's more reactionary. And then as you get closer, okay, communications still up there. You can see technology isn't. So we get a little bit further down the road. Here's a week out. Oh, look what's down at the bottom here. Communication services and technology. And take a look at today, communication services and technology. So it's kind of written right in front of you. I mean, over the last 3 months, these are the performances, and as it gets closer and closer to the time frame, they seem to get weaker and weaker and weaker. Does that mean it's falling apart? No. Just a pretty good scalp off of the highs. So that's kind of a nice way I like to at least start my day and just kind of calibrate, hey, what's kind of going on and how do I compare it from the previous week or the previous month, stuff like that. So far we'll see. It's early in the day. We're halfway. Well, we're not even halfway there. Well, Eastern time, we're about noon. But we'll see. I mean, we'll see if this continues to slide lower or if we start to climb higher. Let's take a look at the chart itself. Let me zoom in here, see if we can identify a decent pattern or a tradable pattern or an idea of where this can go. Now, what threw things off is this reaction. This is all-time highs, broken them 2, 3 times, 4 times. And then we get that corrective action, retraced like it was nothing. Discussed, hey, we could stay in a range for a while, and blew right above it. That's fine. But coming down from a higher high, and this is kind of difficult, folks. This gap down and did not set a lower low. It retested a previous low, but it did break into a new high. Absolutely bullish. You can't argue it. It's just black and white. This pullback can go as deep as it needs, and the shallower the better. But if it gets to a previous level here, if it comes back and touches the 50-day, as long as it can shadow around the 620, it is still technically in a bullish trend because of the fact it did set a new high. So it becomes very muddled, very foggy, very scary, not scary, but very difficult to see. One thing that's interesting is if we follow what is leading this move to the downside, I'm going to show you the cues as well, because the cues is just, it looks like a panic sell-off. It's because it's got some of the heavier hitters in it. But if we can identify the areas where it's going to correct and then pivot, this was a difficult one because it was part of a gap, all right? But we did see it exceed highs and break and move, and the only early confirmation I had when it came to breaking into new highs was, 1 or 2 days? So I would actually like to see more of a sell-off. I would like to see 1 or 2 more of these days. I would like to see consolidation here at the 20, or at least a test back down to this 630 level, or something aggressive that can actually maybe shadow down to this 50. But I want to see a little more. For this to turn and move higher here, like a flip-flop, really doesn't give you too much confirmation of, oh, geez, was that enough of a profit taking? It might not be. But in order for the buyers to step in, the buyers have to be tempted, meaning this hook or this line, or let's call it price, this needs to get deeper and deeper and deeper to get the bigger fish. Once it gets low enough to where the bigger fish decide they're going to bite, then we can get that next surge to the upside. If it doesn't get deep enough, we're not going to get a lot of commitment when it comes to those fish biting and continuing it to the high side. So the idea is healthy, bullish. This is great. Follow along what's leading this. Let's get to the cues. But I want to see more of a sell-off without breaking bullish levels, if that makes sense. So here's the cues. Look at these last 2 days. Big moves, big drops, but the volume. What? Okay, interesting. So understand that this is unevenly weighted because of some of the Fab 7 out there, but it's still showing reluctancy and retracement. I like this pattern. I'd like to see more consolidation. Even a retest of the 50 would be good, but a complete flip-flop. So if tomorrow morning we wake up with a big green candle to the upside, this is going to be a very, very difficult market to believe in when it comes to continuation that, okay, that was the time, let's get in, we got to buy. I think we need a little bit more of a correction. I think we need a little bit more of a sell-off here before we can see some of those bigger fish jump in. Now, it's a little bit different on the diamonds. It's a very different story on the diamonds. Or I should say, the Dow stuff, the Dow components, the energy, all that stuff. It didn't even dip, did it? So it had its corrective action. We're up here. We're still in this really nice ascending triangle pattern, and it's just kind of chopping around. So it becomes a lot easier to identify selectivity, because on those last 3 charts we looked at, folks, they were completely, well, the S&P and the Qs were similar, but this is different. When it's an absolute panic, worry, fear, the end of the world, all of these charts go straight down very similarly. So it is. We're just in a little bit of a profit taking, a little bit of corrective action, which means if we're not already kind of playing with the watch list that we've built, it's going to be extremely hard to kind of dink and dunk. And what I mean by that is identify brand new setups that we can believe in for the next week and a half to 2 weeks. So that's why having a watch list and going from week to week to week and carrying them forward can prove very, very beneficial. So there's the little soapbox for today. So let's just jump out and take a look at some trades if you guys have them, and keep all that in mind. Let me get to our text box and we'll get started. Okay, general question here. Okay, TGTX, to start there. All right. Healthcare. Okay. Funny, we actually had a trade very similar to this yesterday. Last week. And I'm not sure if it was even in the same sector, but it kind of broke out. So, Bill, if you're looking for TGTX, and once again, guys, I'll just add this because this is super helpful. If you're looking for this to be kind of a bearish, or bullish if you want to say, you know, TGTX -3 or +2 or sideways. That really is helpful. Also, if you guys have a trade that's very specific to it, TGTX, you know, 26, 28, 30 butterfly. That is also super helpful. So a little bit, anything you guys want to add to that. But is in general, Bill, let's take a look at it. So it's a breakdown, a nice bounce, and it looks like it's kind of consolidating at that 28 level. On first glance, bearish. Yep, I like the crossover, the moving average. It looks great. You're just going to need more confirmation of this to continue to roll over and slide lower. Some other things to think about is your time frame on this. If the markets are indeed in some sort of a corrective action, and this is kind of keeping this up now, meaning it's going against trend. So once the markets go bullish, this will go bearish. Then you just need to be patient, wait for that confirmation. But overall, I mean, I like it. It seems like a good bear rally. It's having a hard time getting above that 28. Wait for consolidation. You have to be patient on this, though, for sure, if you want to see it continue to go to the bear side. But I'll definitely add it to our list here as possibilities. Moving to the bull side, we'll take a look at APLD first. Okay, good move to the upside here over the last, since the beginning of August, after it looks like it's earnings, right? Gaps up and continues higher. I make mention of this quite a bit, folks, on my end-of-day posts or even these classes. I love to see what companies do after their earnings, and then more importantly, what sentiment does with those announcements afterwards. So whatever these earnings were, they look great, and sentiment likes it, and that's kind of what we have to follow. I think it's pretty cool that it actually broke above previous resistance here, and it's kind of chomping along. So a little bit more of I shouldn't say reluctant, but a very cautious move to the upside. Good move a couple of days ago, but this thing doesn't really want to gap up and shoot up. It's not acting like it did back in here. So this is going to be maybe a little bit more of a +1 trade here, Mason. I do like it. I think it's good. What do we have? Technology. Once again, it's not a technology company. Well, Applied Digital Corp is pretty big, considering, but it's not a Fab 7, right? It's not something that we've seen just make these huge volatile moves up and down. And I've seen a lot of that. A lot of these stocks are doing good. They're doing good for a while. They're just not getting, how do they say it? Taxed or profit taking on them. And this one seems like one of those. So, okay, I like that. That's a great one. Thanks for that. Let's move on to another one, VSAT. Viasat, little high base. See, after its earnings, has a very good approach, good volume. It shoots up and it's trying to stabilize. So this is kind of neat. I find this almost easier to trade when they have the high base that hasn't broken out yet, because once price action decides it's comfortable going higher than where it revisited or where it's tried a couple of times, it seems like that's kind of the next surge. And what I mean by that is, hey, if everybody else is willing to buy it, I want to buy it. I mean, the best traders when it comes to momentum and trades, that kind of what we do here, is you want to be part of the crowd. You don't want to be ahead of it. It's too funny that people think I got to get ahead of the crowd. I'm going to be the smartest one. No, you don't. Just once the momentum gets there, just paddle your board to get on the wave and enjoy it. And then once the wave's done, go find another one. So when you get that surge, when you see that 28 start to really break, then you can say, okay, cool. I'm going to go ahead and throw a couple of bucks at it. But definitely another opportunity. Now, keep in mind, folks, I'm going to write these down, but guys, I want you guys to be mindful. This is another tech. So there's two techs there. Let's take a look at COM. Imagine that's a tech. Right, so these are all three tech companies. What I don't want you guys to do is go out and buy all three. Look how similar they are in their actions and their reactions. And I think that's what Mason's identifying, which is super helpful. So consolidation after its earnings, good move, breaks up. This one seems to be the most extended, but it still holds true. Once the stock seems to be comfortable and happy enough to move to the upside, it's going to. So sit back and watch those and be patient. What's kind of cool is if you're in a situation like that, just throw the first dart that confirms. Chances are they're all super similar, and they've been behaving since their earnings the same, that they might all hit at once. So if you need one of them or two of them, great, but try not to take all three, because they'll probably do very familiar when it comes to how they behave. Okay, cool, thanks. So let's go to the bear side for a minute. Let's take a look at BSX. Boston Scientific. Now, to the bear side's a little much for me. I think maybe a couple of days ago. What's tough about this is, once again, I'm not bearish is what it was put across. It does have a little bit of a slide here. We do have some support that it's on. This is Boston Scientific, by the way, folks. It's a larger company, but it's in healthcare. It's had its own problems. But the last couple of days show, oh, geez, it's a great bounce. But we've also seen the last couple of days in the overall markets be showing some weakness, or has been showing some weakness. So patience as well. See if this can't really start to break down and continue kind of this slope. Remember, this could be a bull flag pattern for all we know. But I do like the consolidation that it's had for quite some time. But it's a stronger company. Obviously, it's a bigger company. We're seeing people coming in and buying it off these shadows. For this to completely collapse back into something like this, it would have to take maybe a little bit more. Now, it did have its earnings, but different reaction than the last couple of charts, right? The earnings, it gapped up, but now it's slowly bleeding lower. Be patient with it. Wait for it to break support levels. Here's why. The overall markets really haven't changed. We're still a +3. We're still bullish. It's still good. It's still great. It's just the last few days are showing corrective activity. This is also showing the exact same thing. So we might need a few more days versus 1 or 2 days. We might need the end of this week and into next week before we can actually get that confirmation of a break to the downside. So be patient with it. Where it sits right now is probably sideways more than it is bearish. But what I'll do is I will put it down as, let's see if I don't run out of room here. I'm going to put it down as a bear with an asterisk. All right, let's look at one more here. Another bear, UPS. Okay, UPS, earnings, not good. Reaction to the earnings, not good. Sentiment decides, is this a great opportunity to buy it back? No. You'd think of an oversold bounce or a short cover rally, things like that. No, it's just anemic. Now, this might just stay muddled for a little while. This is going to be kind of more of a sideways bearish thing, more of a credit, in my opinion, just the way it's been chomping around. If you really want to wait for a confirmation and get a surge to the downside, I don't know if we're going to get something like this again without some sort of action, or I should say announcement, because, I mean, take a look at what this has done for so long. It really does take something to spook it before it goes into this mode again. So something sideways to bearish, I could get on that. I think that would make a little bit more sense. I'm going to put UPS down on the sideways side, if that's okay. But I can totally see a bear here because of the crossover, the move, and the fall. I just need more confirmation when it comes to a directional bear, like a +2, +3. Let's take a look at Caterpillar. Bouncing off long-range technical support. Levels at 408. Well, let's take a look at that. See? Now you guys are getting me some good detail. I like it. Okay. Yeah, good bounce here off of 408. There's technical support. He says long-term. Let's see if I can squeeze that down and find something. Oh, yeah. Look at this. Somewhere back in here. Okay, I get it. Yeah, good. Okay, we'll zoom in. And it's a bull pullback. That's kind of what we're looking for. When I watch the end-of-day posts as well as you guys do, and when I hear, hey, corrective action in the markets, we're seeing a lot of selling in some of the larger things, or the larger companies that they aren't falling apart. But I'm like, okay, so what I should be looking for in that scenario is bull pullbacks. So this is kind of that similar situation. The last couple of days are a little muddled, but this could be a very, very strong support level. So you kind of want to see this start to climb higher, and trust the fact that it probably can come back and revisit this. Boy, that line wasn't straight. It can come back and revisit that line. So don't be surprised if it decides to try to do something like this for a while. But the true idea, the true test is if you could get something to slowly climb this way. So even if it wants to play what I just drew or just what I drew previously, then maybe you're just going to play kind of a range bound, maybe kind of a bull credit, like a +1 trade. Give it a wide berth. Use that 408. I believe that's what you said, right? Where's it? I'm sorry, I lost it. Yeah. Use that 408 as your make or break line. All right, so you can start there, and then just kind of pick an area up here that you could use for that the upper range. Now, CAT does move a lot. It's volatile. So if you wanted to do this maybe with a smaller credit spread in the shorter term, 1 week, and then maybe it burns itself off. Try it again. Try a 408, 420. It burns off. Okay, let's try a 408, 430. Okay, great. It goes a little higher. How about a 410, 430? So you could play it week to week, stuff like that. But kind of respect the range. I'll put it on the bull side, but it's kind of more of a sideways trade. But I do like what you see in it. Okay, let's move further on down the road. WY. Looking at a 21, 25, 29. Okay. So just but at first glance, well, let's do this. Let's make sure. So first glance, the ATR is 57 cents. Depending on how far out you want to put, September. Okay, thank you. September 19th, so regular expiration. That's nice and wide. That's great. I like it. You know, you give it its due. You're going as far out as you want to, letting it get to these extremes if it needs to, right? Or the bottoms before you have to really do anything with it. But I like that. Let's see if I can draw these for one more time here. 25, that's going to be the area, the make break line, and then the 21, geez, it's still not that low enough, but that's fine. It's down here somewhere. Yeah, so you're giving yourself quite the range. Nice. I don't mind that trade at all. Let's go ahead and put that on the watch list. Now, what's cool about these is the wider it gives you, the wider the range at first, it looks wonderful. But when you get in the position, you realize, okay, cool, my risk reward should be pretty decent, not great because it's so wide, but it's going to change massively, which means if this stock gets to 27 or 28, it's going to look like a pretty bad loss, but you still have massive room for it to breathe because it comes right back down to 27, 26. You're fine, vice versa if it gets to 24, 23. So just be able to absorb the day-to-day. Position sizing for max loss really helps with that, but be focused more on your upper and lower legs, and that goes also with the condors as well. Cool. Thanks, David. Let's get to FedEx. We just looked at UPS. Let's take a look at FedEx. Let me get rid of my lines. A butterfly 1.5 weeks, 222.5, 227.5. So we're going $5, right? I'll get as close as I can here. Now I'm fine. So it's moved up. It's moved a little bit lower. He's got a week and a half left. Now these butterflies are going to be a little tighter, right? This is going to be a very good reward, very low risk, but you still have to play that game. Even if these exceed these upper shadows, strike prices, you kind of have to just kind of grin and bear it because they can come back very quickly. But I do like it. So something sideways in the shorter term might be pretty good. Let me go ahead and add FedEx to it. Now, once again, if you guys want something a little bit wider, then you can throw on something a little bit wider. The only thing it's going to do is just going to take away from your risk reward and increase your probability. But there's going to be a landing zone to where you're comfortable and where you might not be. So taking a look at Baxter. Okay, let's look at this as another bear trade. I do like it. Same industry when it comes to that healthcare. However, this one is showing a little bit of reluctancy to roll right back down. You actually almost had a confirmation 2 days ago of a bear rally. However, if it can't break, and I'll go back to, I think I talked about this last week. I'll zoom in a little bit more, folks, and then we'll move on. Let me zoom in a little bit to get some reference. But it's the gap. This candlestick, so whether this was an open or close in this upper shadow, it's a significant point because this is kind of the starting point of what happened to the reaction after earnings. So when you see any sort of price action at or above this area, it becomes a reset. It becomes, this is important. This needs to confirm back down to be a true resistance. And right now, it is really fighting it. Really fighting it. It can consolidate and move higher. Now, most of the time, or sometimes when it pushes above it, you can get what's referred to as a closed gap. What a closed gap is okay, geez, that was an overreaction. It's opportunity for me to buy it lower. It's a short cover rally. I expected this to go lower, and if it doesn't, I'm going to cover my short. And so it usually creates a pretty good surge. So where it's at right now is going to be very difficult for you to make a decision in either direction. So I'll just keep it aside right now, but keep it on your watch list because it really needs to confirm or stay below this first area. But if it stays sideways and starts to move higher, then it's kind of, okay, it's too strong for me to short it. It isn't a bearish trend, but it's too strong for me to buy into it as well. Or it's weird to say. It's too big of a bearish trend for me to buy in it. It's kind of a no-go situation. At least that's kind of how I view them. But thanks for that one. All right, let's take a look at CYBR. How are we doing on time here? Oh, we're good. So here's CYBR. Pretty decent trade. I mean, a pretty decent setup. It's in the tech. It's one of the offshoots. It's not, the Mag 7, but gapped up, traded a little bit back down. You can see it had its earnings. Good move off the earnings. And look at this correction it had, profit taking. But it's right back up. So it becomes, oh, geez, okay, everybody took some profits. That's neat. But what did we miss out on? Maybe this still has something in it. It's tough because it's volatile. The last couple of days have been a gap, gap up, down, and then it opened up or down, a gap slightly lower, and now it's back up to its highs for the day. So it looks like there might be something going on. Always check news with this. But overall, it could be something pretty strong. Now, I know Kelvin wrote me some notes on this. I don't know if I can read them as fast as I'd like to, but let me give it a shot. Looking for a retest of the 450. Okay. Past 2 days. Yeah, okay, so good. Yeah, looking for this retest, that 450 area. What you want to see is if it can consolidate and stay. Once again, I'll go back to the first initial move from the earnings. You can use the shadow, but for me, it's anywhere between that. If you can get a sustainable move, or I should say a couple of days above that first area, maybe your 450 could be your confirmation of a break to the upside. So I kind of like that. It's going to take patience, as most of these trades will, if you guys haven't figured that out, because we're still kind of in that corrective move when it comes to the overall market. So I'll put that down. Kelvin also said there's something, was it similar with Calm? Let's take a look at it. Yeah, kind of, yeah. Yeah, gapping up, pushing higher, kind of trying to climb back up and revisit highs. I like it. Yeah, same idea. This actually this has a little bit more of a shorter term potential, and the reason being is because it already had this first pivot. So if it's really trying to break above that 112, I don't know where it's going to stop between here and here, because this was an absolute reaction just to numbers. But I imagine you could see some more gaps, and then like a retracement, or maybe it just goes sideways, or it could actually hit the 120 and come back. It's just going to be super volatile at that area. But it does have a bullish surge going on right now, as kind of the shorter term answer on this one. All right, we'll take a look at another short. This is CRWV. All right, okay, I like it. Technology. This time it doesn't seem to be doing well, as far as some. By the way, folks, be mindful. I'm going to show you the list at the end of the class. Just be aware of how many of these are techs, both up and down. It helps when it comes to diversifying a portfolio. I like this one a lot. It's very cut and dry. Earnings missed. Look at the volume surge. It's dropped off a little bit, but the expectations of good. That could be a short cover rally or trying to find the bottom, but it's not doing very well as of late. Almost a pretty definitive break below a support level. This kind of seems like it's going to float lower. It feels a little overextended. However, this is something that I would not be afraid of trading to the downside, maybe with a credit spread, 180, something like that. Credit spread, I do expect something like this. Maybe not now. It might go to here first and then back up. But it's just kind of this, you believe in the percentage of the pattern. Make sure that you got the risk reward correct when it comes to the strategy you choose, and go ahead and throw a dart. But I do like that as a bearish setup. Let's take a look at a couple more here. Airbnb. Okay. Airbnb had its numbers, didn't do so well. Gap down, now this is this little rainbow, almost a closed gap. This is a very nice pattern. I like these. They can head fake. It looks like it's going to confirm, but we've seen this before. We could see a red candle and then have it go up a couple of days and actually get back up to this area and then roll down. But the overall bear rally in this is really nice. So if you want to set that up and throw a dart, I'd be more than happy with it. If you're a little bit worried about it kind of moving around before it drops, you don't have to play it as a -2. My first thought would be, hey, a 125, one 1.8. Well, I don't know if it's got dollar strikes, but somewhere like 126 to 118. That's just cut and dry. Good risk reward, very aggressive, -1, -2, -3 attack for the next week and a half. But if you're a little bit reluctant, saying, oh, I might kind of move around here, well, you could always do something like a 128, 122 bear call spread, right? Something like that, just so if it just kind of meanders and drops, you'll still make a little bit money, but it's less risk, stuff like that. But it is a nice setup for a bearish opportunity. Okay, Garth, great. Right into CrowdStrike. I wanted to get to CrowdStrike. I carried CrowdStrike over from last week, and I liked it. I also liked RKLB, if you guys remember that. We'll take a look at those really quick, and then give you this list because it's a good one. We talked about this on the 13th, I believe, and love the breakdown. It's still kind of in that bull trend, but the crossover shows that it's really it's losing momentum. We did have to sit through a bull pullback, didn't we? The 13th, right after class, I believe, or the 13th was here, wasn't it? Okay, good. So no, this one didn't pull back. The next one I'll show you did. So here we are, 13th. It moved down. It looks like it was going to break. It didn't. Today, it looks like it's trying to. It still really hasn't confirmed to the downside as much I'd like. But folks, this is a bear that I really am into, and I'm more than comfortable to let it sit. Now, it's going to play its game, but this has been one of those stocks. I don't know if it's a Fab 7, but it's one of those stocks that's really enjoyed quite the move. And so I'm not going to take it too much further than into its 200-day moving average, $405, just because I think you're going to find some weird things that happen with it. That's an opinion, but that's where my target is. But I still like it. Yeah, so CrowdStrike's there. Let me go ahead and show you the other one. This is RKLB. This is Rocket Lab. I know this is one of those, I don't know if it's Fab 7, but this is really had just this massive surge. We talked about this on the 13th as well. It did bounce. That's where it is. You had to sit through this, but look what it's doing today. Finally, a little bit more of a confirmation. We'll see where this doji goes, but I do like both of them as a -1 trade moving forward. So awesome. Okay, we're going to do one more because we don't have a neutral, but let's take a look at this. This is JCI. And this is going to be potentially bearish, especially if it breaks down the recent lows around 102. Okay, thank you for this trade. And I agree completely. So it is a sideways trade because it's gapped down after its earnings, and it just really seems to want to fit itself back to where it was comfortable. Right? Big move here. And then kind of chomped around earnings, maybe good or bad. It doesn't matter. Sentiment did this with it. But I agree. I think kind of a sideways move here, but give yourself a little bit of an advantage, or you could, or just give it a little bit of a break, meaning don't get hurt if this thing decides to break that 102 level, because I could see exactly what you're talking about. Because once that breaks, I mean, I guess you got a little bit of resistance here, but look at this. I mean, I don't know where that's going to stop. So maybe if below 102, you can be a little bit more bearish, but try to play that range. I like it. I'll put JCI on the sideways trade. So what I really like is with most trades and a lot of stuff that we've been following, folks, is you can do a little, sideways to bear, sideways to bull. I want to do a +1, +2 trade. I mean, there's ways that you can set trades up for that. So here's the trades that we talked about today. A couple I'll make note of that I do like. LVS was from last week. CrowdStrike and RKLB were both from last week. But these are really good. I like them all. Be super mindful of which one of these fall in the exact same sector. I usually get sector blind because I get so excited with charts that I realize, oh crap, I've got eight trades I want to make and they're all in the same sector. So pick and choose the ones you like. If you can't decide which ones you like, what's always really cool, set up some trades for all of them, and which triggers first goes first. That way you don't have to really worry about it. This is awesome. I really, really appreciate you guys. This is great. Hopefully you're enjoying this. I'll get this posted up so you guys can review it again if you'd like. But let's keep it going. I appreciate it. All right, folks. Bye, everyone.